voice, man. How you been?
I'm fine. I'm good. Thank you. How are you?
Sweet. Quite well.
Nice to see you all again.
Yeah, nice to see you.
Yeah, no, this is nice. We can do this
Yeah.
more often. Sam and John and I were talking about out west. I think a few of us about getting this kind of like a weekly,
Yep.
1 hour a week after one of the briefs or before at 4 p.m. my time. It was like, got to get that going.
Yep.
Yeah, we should.
That'd be a good idea.
Yeah, we figured out that actually about 2 hours ago was like the time that Australia, US, and Europe kind of all were awake.
Yeah.
4 p.m. Eastern, something like that.
Sounds good.
Okay, so we'll start.
Well, I will mute myself, Reza. I'm sure you have lots of cool stuff to say.
Well, we'll see. I mean, anything I share, you guys obviously can probably do a better job with editing. But okay, perfect. So I was talking to myself the whole time. I thought I wasn't muted. So I went ahead and prepared everything for you guys. Open up the screeners or the files that I sent on WhatsApp. You can open them as text files and just have a look at the requirements. One thing to consider though, do keep in mind if you do have Stock Rover installed, or I guess set up with a 14-day trial, it would be helpful to have it loaded while I show you guys, but nonetheless, it's not that big of a deal. This is more of an intro just to give you guys an understanding of what the purpose of these meetings will entail. If you guys have any better suggestions to how we should, drive the meetings, let me know as well. But based off what I think is necessary, I do want to have it done so we have the screeners already ready to go for fundamentals in terms of penny stocks and as well as sector ETFs and all that jazz. I'll show you guys with Stock Rover. It pretty much does everything we want to do on MATLAB in terms of correlation matrices or in terms of your own scanners and screeners. The only purpose of now porting it over from Stock Rover to Excel is to have more libraries and more criteria to be used as screeners outside of fundamentals, like technicals and other type of drivers, like news sentiment and all that stuff, which we can subscribe to Quando. And then the third step would be to port those Excel screeners as is into MATLAB to run with the WFA toolbox and see, okay, like the DI script and let's say the DAVO and the BOT, how those ones would perform after the screeners already screened all the stocks that are both fundamental and technically looking good. And we can obviously port this over to crypto, no problem, because with crypto, there's other ways of fundamentally screening a lot of coins, whether it's through like GitHub interactions or like, for example, there's many different things that we can implement that there are data feeds available for. I just feel like with the stock market, coming into October, September, it wouldn't be a bad idea to get ready for some good stock picks. And you guys also are based in Europe, and Colin and I were based in Xavier as well, and Andrew. We're based here in Canada, and we deal with a lot of like TSX ventures as well as pink slips, OTC US type tickers. So I mean, if you guys have any type of suggestions for European picks, I mean that'd be good as well, or different ways to screen European stocks. But I guess moving forward, yeah, the main purpose of this is just to make sure that we go ahead and set up the right screeners for both fundamentals and technicals before, especially Rafi's interested, before we actually go ahead and use the DI and use the DAVO in terms of screening with WFA Toolbox. And if we were to set it up on Excel, porting it over to MATLAB is super easy because the same data feeds we're using on Excel is obviously working on MATLAB. And it's not that hard to port over. It'll probably even take me a couple days. The hardest part is just porting over the strategies that we have for DI and for DAVO from PineScript to MATLAB, specifically to the M language. And that's probably going to cost us $1,000. It's not too hard. One guy's already on his way doing it, and he's giving me a 1 month time frame. So, I mean, it's in the works. So while he's porting over the strategies to use on MATLAB, we might as well just build the perfect screeners based off what Brian already provided. And I already edited a ton. So, I mean, first thing, I'll go ahead. I'll send it on the WhatsApp group. It's called PA Live. And this is $150 a year. And when you plug this in, you can go into, let's say, the functions list. And you can find all of these indicators now that it has the option to use. On top, it also has candlestick patterns. And here's the link for the functions, just so I can show you guys on WhatsApp. So now opening the first document or first strategy I sent on WhatsApp, the venture, I guess we'll open up the growth at a reasonable price, the most recent text file, the one from, I guess, 2:49 my time. If you open that one up, you can see that I went ahead and put in the screeners here. So the growth at a reasonable price screener, just so you guys know, comes default already with Stockrover. So Cancelim and GARP are by default Stockrover screeners that I guess Brian might have perhaps taken from there, because from one of the examples on the fundamentals sheet, it did specifically mention Stockrover's GARP. So he was familiar with this model. With GARP, it's really fun and straightforward just because of the fact that it actually gives you what you need. And from there, you can use the technical analysis to filter it out. And it doesn't give you too much data. Let me show you my screen, see if that works. Here. Have any of you guys, by the way, just for the record, have any of you guys used Stockover yet or signed up for the 14-day Premium Plus trial?
Yeah, I've done it today. I imported the screeners and stuff.
Yep. And how are you finding them?
Well, it's the whole website is nice to use because you got many different sections and ETFs and everything, and the screeners as well. I'm scrolling through the charts now, so yep. Yeah, it's cool.
Here, so I'm going to show you now my screen. Let's go ahead here. Show, perfect. Okay, so now I'll show you my screen. Show. Okay. So this is how we first started our GARP screener. I went ahead and I added these variables. I went into the momentum view, and then within the momentum view, I added a 52-week range and also a 5-year high range. So this is an example, because with this, I don't necessarily want it to put any type of technical indicators onto here. Let me know, by the way, if you're having difficulty seeing my screen.
Very clean.
Okay, cool. So I purposely did not add any technicals because I wanted to see, based off of the fundamentals, if it would be able to align with what we need in terms of technicals, right? I want to get as little noise as possible and add more variables or more inputs if needed. And ideally, in a perfect world, if you can see here, a lot of the stuff based off what I added here, these don't come with the default view. I added them myself, but based off the 52-week range and 5-year high, you can have it sorted. So if, let's say, it's only 3% of the way to hitting the 5-year high and it's really low from hitting the 1-year high, then this is probably not the best pick, right? But in a situation like this, where within the 52-week range, it's nowhere close to its high, or within the 1 year, but within the 5-year, it's already retraced 50%. So if you check something like this, for example, I'll show you right now. Fun business. While it loads, just give me one moment.
You got 6,000 emails, bro? That looks so stressful.
Yeah, I'm a busy man, I guess. Okay, it's almost done loading. It's weird how it's taking this much time. Shouldn't take this long. Oh, that's weird. I shouldn't have done this. Darn it. Worst time to poop out on me. Can you guys still hear me? Is there an issue with my internet? Or?
No, we can hear you. You're still there. Probably just running a lot, right? You're recording. You got.
Yeah, I'm recording it.
So I mean, it's probably just.
What's the name of the file on Drive? Did you share it already? So I don't see any.
So the drive, I went ahead. That's weird. It crashed on me now. Interesting. The Google Drive, I have everything on top that I'm going to be sharing in terms of also like a sample spreadsheet that has all the data feeds. I'm trying to get it onto Google Drive, because if it's on Google Drive, then we can use just one data feed that I subscribe, and you guys can play around with it. I'll make different tabs. Because with these data feeds that I bought, it's $50 a month for the first one, and it has up to 100,000 requests per day. So when you're doing 100,000 requests per day, it's really weird. It's I'll show you. It only limits you. I guess I'll show you my screen. It limits you to only 100,000. So like, let's say if you're pulling up a stock, a ticker, and it has like 10 different factors, for example. One could be like the price earnings growth. One can be, for example, I don't know, let's say RSI or MACD, and you're only pulling up daily. Then if you were to go ahead and do 100,000 and divide that, let's say by I don't know, eight inputs. That only gives you 12,500 tickers that you can pull on a daily basis with eight inputs. And if you're trying to build regression models, that wouldn't really work out, because if you're now trying to pull 2,000 stocks, right? And out of the 2,000 stocks, you still have 12,500, then you can pull every day 6 days worth of data and build a database 6 days at a time, every day. So one thing that we need to be cognizant of is if we were to actually, let me quickly just show you this now that it loaded. If we were to pull up data and build a regression model, we can't pull up, like, let's say 5 years of data for every single stock on the S&P, unless we want to drop like 2-3 grand for our first month of just like 2 million requests per day kind of thing. So to start, what we're gonna do is cool. So to start, what we're gonna do is we're gonna build the best based off stock over here and based off everything that we can add. We're gonna build a model that's the most suitable based off like the forward testing and nothing to do with back testing. Once we find a model that fits our forward testing model, then we can go ahead and start collecting data for a basket of, let's say, 50 tickers, but collect, like, let's say 2 years worth of data. So every day when we're pulling it, we can pull 5 years worth of data for 5 pairs on top of pulling like 2,000 tickers, end of day prices and all that stuff. And I'm probably going to upgrade the API as well for us. No problem. I have a budget of a few hundred a month, so that can easily give us a couple million requests per day. But going here, for example, my earlier example with this stock, as you see, it retraced almost 50% from the 5-year high, but within the 52-week range, it hasn't retraced anywhere close to its high within the year. And this can now show you that the structure based off the fundamentals is, this doesn't look too great, but at least it came up from the lower low and built some type of, structure a little bit to go ahead and move forward. If you look into the 3-month, for example, it did make a double bottom here. And like I said, this has nothing to do with the technicals. It's just purely fundamentals. So one point of today's meeting would be to screen the fundamentals in a way where it would give us the results as close to the technicals that we need as possible without adding any type of technical indicators to it. And then from there, we can go ahead and add the technical indicators to further fine tune what we need. Because right now you have a lot of these stocks, right? And this is great for a screener. But when you're trying to have it so it actually goes into trades, this would be way too many stocks to get into. Because just off fundamentals, you don't want to trade. The same way how you don't want to trade purely just off technicals as well. So, but for stuff like this, like Nova, right? It's coming up a tiny bit. And for something like this, you would be, okay, cool. This might look great from the fundamental perspective, but technicals, I mean, it might have a longer double bottom within the 3 month, but it's still not looking too good. So on top of this, what you would do is you would add something like TA library and put this onto an Excel spreadsheet and add all of these integers onto it, whether they're candlestick indicators or technical indicators. And these ones are super straightforward. You would just go ahead and add this with here. I'll show you. So before adding even TA library, you can go into the technical indicators over here, and you have all these options for TA indicators, whether it's SMA, EMA, or MACD crossover. And something like this might help with the weekly trend if you're trying to just buy only on an uptrend. But many of these pairs, they're not really, they could be going bull before the trend confirms on the weekly. That's kind of why I don't use these too much. I'd rather stick to the more elastic indicators or use it off of multiple time frames. But this is just an example. You can see now with the other indicator I made, or with the other screener, it was canceling. We just Andrew and I actually, we edited this one to further meet the criteria of what we need. With this one, if you go into the update screener section, we changed it a little bit. So it needs to be almost approaching the 1-year high, within 15% of hitting the 1-year high. We also made it so RSI needs to be above 50. But the total shares, we took this out for now, just because many new companies, they're kind of taking the whole Ripple approach where they're issuing like micro shares off the pennies. So with the shares available, we took out. RSI, we also took out for now. And we only left institutional ownership and the EPS in equation. Just because with many of these, they were trying to play the role as the TA. But because of the limitations of what Stockrover has, these ones that I unchecked actually has a really bad effect on our filtering process, because these are not accurate enough to filter the basket that these 3 filters actually brought up. So out of these 30, my whole 2 cents I'm trying to let you guys know is, out of these 30 stocks out of 12,000 that I found, with these ones in place, it filtered some out for sure, but then it also filtered some of the really juicy ones because these ones were not a good measure. So the whole point of now adding TA Live is the ability to add all of these type of candlestick patterns and indicators into the equation, which will give us much more flexibility. This is still a great starting point nonetheless, especially something like Cancelim. It's more for, like new venture kind of type IPOs that necessarily, they still have low institutional ownership and they don't have too much action going on yet. But these type of stocks as well, you definitely want to use TA on. Something like GARP, the growth, I guess like the growth at a reasonable price screener. You don't really need too much indicators for that because that's purposely trying to find companies that are in the growth stage. You're not trying to find something that's double bottoming on a GARP screener. But on Cancelim, you definitely need something double bottoming from its early stages. Same with venture capital. I made a venture capital screener with Andrew for the TSX Ventures market and for the OTC Pink Slips market in the States. And with these ones, they're super simple. I guess I've been paper trading with these ones just maybe for a week now while I've been getting this set up. And I went ahead and I added some filters for the 52-week high filter. I went ahead and added the RSI, the 1 month volume, minimum $10,000 volume per month. So that filtered out pretty much every stock that has been inactive. And diluted shares, obviously, we kept it low. And you see we have 16 stocks that came up, right? So something like this would also be super helpful if we were to add the technical indicators onto it. I did, however, add RSI as a way of just screening through it. So even though it's not a measure to filter them out, you can see that within here, RSI is still like a factor that shows up. And based off all the fundamentals that we added on the screener, you can see that automatically a lot of the stuff that it shows is still below 30 or within 30. So this is one example of it working pretty well. Also something like here, if you see that, let's say a stock like this has reached almost 40% of its 5-year high, but it's on the low within its 1-year high, then you can go ahead and find out here what's going on. And this, if you were now to add a technical, I guess, indicator onto this, you can easily see that this is a no-go, right? I mean, technically speaking, you wouldn't really want to invest in something like this, even though the screener says that it's good to go. So this is why we need the technicals and we need to fine tune the technicals. And this platform won't really do it for us in terms of the technicals. It screens it perfectly on a fundamental level. And I really enjoy how it's actually the graphic user interface does the job really well. But, overall though, if I was to have this as a screener and execute automatically, I wouldn't want this to just be based off fundamentals. I'd rather have 1/10 the amount of stocks show up on the screener on a daily basis after end of day values are calculated, but have them so at least they're way more likely because none of these take technicals into account. And the only way you can add technicals is if RSI is below 30 or if MACD is below the crossover of 0. And obviously as well, the market right now is not looking too good. So I mean, it's not really worth buying any of these. Maybe in September, October, if I was to look at the same screener, many of these technically would be looking good despite fundamentally also looking good. But as of now, this is pretty much what I wanted to share in terms of the screeners and where Stockover lays, because I don't want you guys to think, okay, Stockover is the best option for automating it. It's a great option for playing around and learning how to use it and learning how the different, I guess, indicators or different fundamental screeners play a role in the filtering process. Because unlike Excel, where you have to put in formulas if you want to change a screener or change a criteria, with this you can just right click and add and use this as a perfect proof of concept tool to, I guess, fundamentally choose the criteria. And then when you nail the fundamental criteria screening process, then whatever, I guess, parameters or criteria you set, we can now put it onto the Excel sheet with tools like TA Live and a few others to integrate technicals and even other stuff like sentiment for stuff outside of this stuff. Like I know on Quando, they have a news feed where they give you the sentiment end of day and every 4 hours on any stock or ticker you want. And they give you sentiment based off of 5 different stuff like news BuzzFeed or like news website sentiment feed or like social media sentiment. And they give it based off of a score of 1 to 5. So adding something like that on top of the fundamentals and the TA can even help us make more powerful models. And this one also, the Stockover, they have a lot of markets, but they don't have every market. So that's also one thing to also consider. If you were to, let's say, use this in European markets, they have the option, but they don't have some like they don't have the CSE, for example, in Canada, or they don't have all the markets in the US. So this is just good for a very proof of concept type model. And then going forward to correlation, if you guys check out the correlation matrix, this is something really worth noting because on MATLAB, we're getting this developed, but this is going to cost us, like I said, roughly $1,000. And with this, you have to manually load all, like Raf knows this because he's been playing around with MATLAB lately, but you have to manually load all of the data sets and all the end of day prices for all the stocks that you want to do a correlation matrix for. But as you can see in this point, they go ahead and you can just select the basket. So here were the baskets that I imported. Obviously, if you choose like a basket to compare that's within the same sector, like let's say cannabis, you're going to see that most of these have a correlation above 0. Okay, and that just makes sense because they're in the same sector. So when you're doing, let's say, a sector ETF and you want to go long on, let's say, a cannabis sector ETF from ProShares, for example, right? Well, if you were to check out their basket and add all the stocks in their basket into this matrix, you can have a better idea of where they're going. And a lot of people, they say, okay, well, I'm going to invest in this penny stock. It looks really juicy, etc. But if you were to now to load up the matrix that the stock is in within the same, I guess, cannabis portfolio, then you can see in relative to other companies in the same sector, how correlated is it? Is it moving quicker than the other ones? Is it moving in the same direction? Is it moving in the opposite direction? And you can see based off here, just based off the matrix, most of these, I guess, are above 0 because they're proving the same purpose. But if you were to now, let's go into the ETFs and do the top 25 ETFs by market cap, you can see that the ETFs obviously are diversified and are in different sectors or in different, markets. And you see now there's way less correlation. Some are almost perfectly inversely correlated. Some are, positively correlated. Some are inversely correlated at a higher rate and lower rate. And this obviously, this is the last thing you want to have in a correlation matrix. You don't want to have a correlation matrix that has a huge variance from positively to negatively correlated, or else you're not doing your basket right, or you're not setting it up. So if you were to now find out, remember how Colin, you were mentioning that you found those three pairs last week, and you said that they were correlated, right? That was super key, because for something like this, now you can go ahead and if you're into, let's say, the blockchain sector within like the capital markets, you can make your own watch list of all of these stocks and then just load them up here, and then from there see how correlated they are and set alerts. So when, let's say, one becomes inversely or positively correlated and switches the trend, you can get those alerts. And this is also really good as a proof of concept before you guys get into the MATLAB, because if I was to show you guys the correlation matrices and all the formulas on MATLAB, it would probably just scare you away because you'd have to manually go ahead and load the data sets for everything. And it would be a pain. If you closed MATLAB and reopened it, you have to reload them. This just makes the proof of concept modeling a lot easier. Kind of similar to how I mentioned how TradingView is a great platform to learn how to algo trade or to learn the basics of trading or even technical analysis, because of the fact that it's super easy to drag and drop and plot your stuff and execute stuff on PineScript. It just doesn't have the robustness of actually doing mass executions or mass, algo trading type stuff. So I guess moving forward, this is kind of like the preview of what MATLAB will provide to us. But this is pretty much everything that MATLAB has to offer. Like the other stuff I showed you with the screeners on StockRover, that's already nailed down with the fundamentals criteria screener. But you and I, like we all discussed that we have to add more stuff to it that's only possible outside of StockRover, like TA indicators and patterns and different sentiment feeds from Quandl. But for the correlation of daily returns, the only difference from doing this on here compared to MATLAB is on MATLAB you'd be able to add multiple time frames, because on StockRover they only let you do end of day data, and that's fine. But if you want to go more into the quant side of trading, you'd want to do the same correlation matrix off of the 1 hour data, or at least like the 1 hour or even 5 minute or 15 minute, and see how elastic these stocks are to changes in price. So if you were to do a regression model based off the correlation matrix and find out that within a basket of 30 cannabis stocks that you invest in, this one stock always is the most elastic to change, then you can use that as a leading indicator to start trailing your profits on every other cannabis stock within that same basket that you invest in. There's now you're not limited to strategies that are just related to RSI or MACD or breakout and structure. Now you're also you have these options to see, okay, if leading indicators of different stocks within the same basket that are known for shooting up before everything else was to shoot up, then that would be an indication to sell your shorts if you're in any short positions within that, or vice versa. So this is the correlation matrix. I'm making the watch list for us for all the sectors. You can also go here. Like I added one ETF. All right, I'll show you here.
Reza.
What's up?
Oops, sorry.
Sorry.
Can you say a few words? Can you hear me?
I can hear you. Yep.
Can you just lose a few words to the metrics and the numbers? So what is good, what is bad?
For sure. So I guess with this is seeking alpha. So I'll show you right now.
And another question: can you also screen like currencies, like and gold and silver and so on, commodities?
Yes. So if you were to make your own watch list, for example, which I'm going to be sharing in just a second, you can see that with the watch list, you can add anything from like US dollar futures to sector ETFs. This one specifically does not have any type of, I guess, like Forex or stuff like that. I think there is maybe an option to add Forex, but based off what I've seen so far, it is just limited to capital markets and equities and ETFs. But let's say if you were to do like a correlation analysis, I'll just quickly show you how the coefficients work. 1 second. Okay. So. So typically speaking, when you have, let's say in here, I have the exact notes from my school that I can share with you guys really quick. But typically speaking, whenever there is a positive correlation, let's say above 0, then it shows you, I'll show you right here, sorry. Let's go into, let's say, big data. Go into 3D printing. So something very niche like 3D printing, for example, you're going to find assets that have a correlation of above 0. Okay. So this just means that whenever this correlation is above 0, they tend to move in the same direction. And all of these are going down in price, right? That's why there's a heat map here. But because they're all moving down at the same time, you can see that some of them are, if this is the index to 3D printing, and this 3D printing index is just the sum averaged out from all of these baskets. So if let's say the index was 1, you can see that something like ANSS or ANSYS is closest to a number of, like, if let's say the index decreased by 10%, this one is the closest, or this one AME is the closest to the 10% decrease. Something like, let's say 0.42, you can see that it's correlated still positively with the decline of the total index, but it only moves less than half of what the rate of the total index moves. So if the index dropped 10%, this would most likely drop less than 5%. It still drops, it follows the same trend, but it doesn't drop as much, right? Anything that's negative, so let's say below 0, so -1 or -0.01, it will tell you that if one asset goes up, the other one will go down. You can also, now this is why I really want you guys to become familiar with Stock Rover. You can see that when you put your mouse over here, it'll tell you where the most, I guess right here, I can tell you the most correlated asset right here. So if you go on AME, for example, it'll tell you that it's most correlated with 3D printing, but it's least correlated with DDD. So if now you had this stock, DDD, you can see that, okay, cool. If you were to have these two, that DDD would be a not bad hedge. It's still not a hedge because they still move in the same direction, but it moves way less in the same direction as the 3D printing. So I mean, if it was to go up 10%, DDD would only go up, let's say 1% or 1.8%. But if it was to go down 10%, it only go down 1.8%. So this is a way to hedge yourself and have a portfolio capital management strategy in place. So if you were now, let's say, to take out the 3D printing and go into sector ETFs, This is why I want you guys to learn this. You can see the correlation between the different sectors and find out, okay, how are these sectors related to each other? And this is obviously using end of day data, right? So you can see here that generally speaking, they're all positively correlated. You don't need some fancy investment banker like Macro Voices guy to tell you this. You can just load this up, watch it every day, and see, okay, cool. The overall sentiment in the market is every sector is declining right now, right? So then that's it. That's all you really need to know in terms of this stuff. It doesn't need to be overcomplicated. The only benefit of becoming more familiarized with the correlation matrix is to start considering making your own models. Colin and I were talking earlier about different types of strategies for fund management. And if you're managing a fund and you're picking stocks in different sectors and you have a basket of different, accounts that account for these different sectors, you don't want to just blindly buy all these stocks when it looks good technically and fundamentally without knowing what impact it will have on your portfolio. So then by having something like this, a matrix, you don't necessarily have to add the ETF. This can even be an index that you make on Stockover that has everything in your basket for that sector. You can see then the correlation between each of your portfolios and what they have. And the correlation will just be based off the end of day prices of all the stocks that you have in your portfolio that you also added on here. So that's one way of also doing this. You're only limited with this is you're not actually having any crypto data, and that's fine because we're going to do this on MATLAB anyways. All the tools are already done. I just want you guys to learn this and the proof of concept of it and the criteria screening of this before we actually went ahead and applied this to asset classes outside of what Stockover offers. Because Stockover also, like I said, only has end of day data and not hourly data. So the good thing with MATLAB is if we were to now implement 1 hour candlesticks or 1 hour data into our tables over there, then we can get more elastic results on when these assets actually crash and which ones are leading indicators. Because just from this alone, you can see on the daily which ones were to crash first or which ones were to start declining. But if you had the data on the hour instead, it would give you a way better indication to which one's actually first. So you can now have intraday stop losses or intraday alerts to protect your portfolio from experiencing any kind of sabotage or any type of really bad losses. And then they obviously have the rebalancing and all this stuff here, but I don't want to go too much into this. Rebalancing is a conversation for another time. I guess before I continue or move forward, do you guys have any questions regarding the screeners and the correlation stuff?
Yeah, you said just you can see which one crashes first. But you mean because of the correlation, if one stock crashes down, then I can see which other stock is correlated the most, so that will be the first who crashes after them, right?
That's right. And if you were to say, let's say, have the 1 hour data and see that, okay, out of the 1 hour data, every time one specific sector or even one specific stock within like a basket was to crash, what is the relation? Like, does this stock always crash first every time the whole portfolio of that basket goes down? If that one stock, let's say out of the past 10 times that it went down, that stock was to be 7 out of 10 times the leading indicator, then you can get that data on MATLAB and use that to go ahead and set your trailings for any long positions you have if that one stock was to begin declining. Kind of like how the NASDAQ 100, 10% of the NASDAQ is based off of Microsoft stock and the other 10% or 11% is based off of, I believe, Apple stock. So, I mean, if let's say either of those two were to decline, that alone from the NASDAQ 100 ETF is already 20% of the total portfolio. So, I mean, just that alone, right? If you're doing any type of NASDAQ ETF trading, right, trading the index off that, you would use Microsoft and Apple as your leading indicators. So if those ones were to crash, you'd sell out of the ETF for the NASDAQ because everything else will obviously decline with it. So same kind of analogy with this. And this, like I said, is only end of day data. So we'd have to add more time frames, but that's pretty much with the correlation. That's all.
Is there any way, like you said, with those watch lists, I've been thinking about this in crypto for a long time. There's a lot of the same kind of stuff. So you have cannabis there, you have big data, clouds, drones. And crypto has the same kind of thing, right? You have the pay cards and then you have your platforms. Like, is there any kind of customizable place where we could, is that what you're saying about MATLAB, where we could potentially create our own baskets?
Yep.
Track? Because that is exciting.
Yep. And the correlation stuff, we don't have to add the correlation is not like the screeners. You don't have to add like fundamentals or technicals to this. All you need is the end of day price or end of hour price or end of 5 minute price, and just load them all up. What's stopping us from doing this with crypto is Stockover doesn't have crypto or forex. They just have ETFs and equities and stocks and stuff like that. So I mean, this would just be an example of becoming more familiar with the correlation matrix, and then from there using the inputs that I collect, because I'm going to be getting data feeds for us and compiling them into databases. Kind of why I was thinking of having a shared virtual private server where we can actually go ahead and use. Or maybe I can create a feed so everything that I download, I can automatically upload it onto a server which you guys can stream from. So that way you're not actually feeding the data. I'll be feeding it from the VPS to a main server, and from there you guys can all stream it from MATLAB. But I guess before we get to that tangent, that's something I can set up for the infrastructure. I just want you guys to be more familiar with the correlation matrix. And yeah, and I guess correlation matrix, I'm gonna have the watch list ready to go with everything that Andrew and I use. And this is just the more default stuff that we loaded up. And moving forward with the crypto, we can go ahead and add the crypto stuff in a bit. But I guess this is what's happening on MATLAB. We can also have this done on Excel. It's not an issue to finish this on Excel, and it should be done really soon. But the screeners is the biggest priority here, because this pretty much does everything we wanted to do, just without the crypto or without the intraday timeframes. But it will take a while, at least a month, for one of our guys to finish up the correlation for crypto on MATLAB. So till then, just become more familiar with this tool. And if you guys have any suggestions as well for the screeners, the ones that I sent out over, fundamentally, I think Andrew and I, we've done what we could so far, and it helps. We just obviously now want to add the technical part into this, and obviously the time of the year is not playing in our favor. But if you guys have any suggestions for adding more screeners or changing some parameters, that'd be great. One thing with MATLAB is, with MATLAB, like with us right now, I'm manually going and checking, okay, how is this efficient? I'm sorting it by ascending to descending, seeing which ones give us the best results. Only difference that MATLAB will provide compared to this or Excel is it'll actually find the optimal parameters for us. So if I was to load the CANSLIM, for example, and I do update screener, and I see all of these, on MATLAB I can just plug in these like 2,000 stocks with the end of day data and have it search everything and come up with the best parameters for us, if that makes sense. But I don't want to go down that tangent where we're reinventing the wheel. So what I'm going to do is I'm going to leave the fundamental parameters as is and just put technicals in there, like EMA, SMA, everything, all the candlestick stuff, and have it optimize those parameters instead. Because fundamentals is like, it doesn't make a difference if, let's say, the institutional ownership is less than 5 or less than 10%. You know what I mean? That's not going to make a huge difference with cherry picking or stuff. Like if we do, let's say, with 5, we have 30 out of 12,000 available. But if I change the institutional ownership to 10, right, then I have 33. So I don't really need to put an effort to optimize this integer. There's no point. It's a waste. But now if I was to add everything from TA library into here, and now have it optimize all of these ones, or at least maybe 20 of the 200 stuff they have in the library, then we can get more in-depth models. And on top, with the WFA toolbox, we have the DI script and the DAVO that already are in the works of being ported over. So then when these fundamental screeners load up with everything that we had from here, it'll put them into a list, and then from there have the DAVO and DI script screen through them to see if they're good picks on a level of TA. So that's pretty much a summary of what today's meeting was pretty much wanting to get you guys more familiar with.
Great site, man. It's really cool.
Yeah, thank you. And
Yeah, thanks.
you guys, the Excel screeners and the MATLAB stuff is on its way, and it will be done very soon. Before you guys start working on that, or if you guys are still even interested in going into that side of the market, just please become more familiar with the correlation matrix and with the screeners on here. And I provided everything. I also provide the watch list for you guys. I'm going to actually finish it up and add the proper watch list of every basket that we have in terms of ETFs for sectors, or in terms of dollars, or for like futures, like US dollar futures and all that stuff. And I can go ahead and make something nice for us, and from there port it over to Excel and MATLAB.
Just one quick question about MATLAB. I'm not sure if you can answer that. It's not related to this necessarily.
No, what's up?
But it's just when I upload all the data, let's say for a coin, and then at the end of the analysis, it gives me, let's say, the result. And it says, for instance, the EMA cross, let's say the 10 and 5. Is that necessarily the best, or is it just like checking all the periods? I'm not sure if
it's checking all the periods. So like with MATLAB, have you used the WFA toolbox, right?
Yeah.
Okay, so with the WFA toolbox, the strategies that it comes with are default. So like if you, let's say, put ATR or EMA or whatever, it only optimizes 2 parameters. Now with the DI and with the Dabo that we're going to be implementing, with the Dabo, we came to the conclusion that we're going to have it only optimize the entry, because the Dabo is really good for an entry tool, but in terms of exiting, there's so many other factors like order book and all that stuff you want to come into play. And I personally don't, like, obviously when you're playing with statistical models in TA, you want to set risk reward ratios because you want to have targets that are obviously, going to be vetted for 66% of the time. But in a perfect world, if you want to set your exits, you want to check order book levels, you want to check correlated assets to see which ones are more elastic and which ones dump first, right? And there's so many other factors that come into play. So with the WFA toolbox on MATLAB, the DI and the Davo are only going to give you confirmations for the most optimal entries. And that's
okay.
Anything to do with profit targets, risk reward or whatever, we're going to tackle that after we targeted the entries and nailed the entries part. And the exits shouldn't be too hard. There's ways of analyzing the DOM, there's ways of analyzing sentiment or finding which correlated assets are first or most elastic to move first before the underlying asset moves. So those are all different stuff that we can cover and stuff that we already have being built. But before I overstep my boundaries and work too hard, I want to nail the entry part. So with MATLAB and Excel, if we can have it give us the optimal entry based off everything that we have on Stockrover for the screeners, plus the fundamentals and the criteria for the correlation, and the TA stuff we add from TA Live and all the stuff we add on top, plus the Davo and DI, then our entries is gold. Then we have that figured out and we can get the alerts, whether it's on the TRI dashboard or whether it's on your phone. We can get that good to go and then have it execute eventually. So, I mean, with MATLAB, you can eventually also do executions from MATLAB into your broker, whether it's through interactive brokers or on Binance. But I think for now, just nailing the screeners for the actual, just the alerts to get in, considering it's end of day, it shouldn't be too difficult. And that should probably take a couple weeks for me to finish up everything. And then once it's done, you guys have it running on Excel or MATLAB, then we can slowly move over to optimizing the best ways to exit a trade once it went in. And that's much easier to optimize because then you're only optimizing a list of pairs that were already bought. So you're not scanning like 12,000 stocks every day for an exit point. You're only scanning like 100 out of the 12,000 stocks that were actually bought and recognized from MATLAB as purchased. So now it's much easier to scan like 5-minute candles because you're not pulling up. Now you can pull 5-minute candles for 100 stocks because that you're already in those positions for 100 stocks. You need to get out so you can get more frequent data. Getting 5-minute candle data for 12,000 stocks for entries, that's not really efficient because you're going to overload the API. So, I mean, that's pretty much everything in a nutshell.
Okay. Well, thanks a lot, man.
Yeah, my pleasure. And I have all your emails, so I'm going to make a proper Google Doc set up, not just with the screeners for the fundamental criteria, but also for the watch list. And the watch list will be specifically for correlation matrices for you guys to load there. And within there, there's also other stuff you can do. But I just want to keep this meeting really brief, just so I don't give information overload to you guys. And then if you guys want to do a meeting, whether it be in a few days, I guess by the end of the weekend, I should have everything good to go with the Excel and MATLAB for you guys to plug in with the template. So give me a few more days to get the Excel screener done with all the fundamental criteria that I showed you on Stockrover on top of the TA. And then we can just build on top of there. And if you guys find any other better criteria as well, just let me know or just give your input. And yeah, that's pretty much about it.
Sweet. Thank you very much, Reza.
Yeah,
thanks.
My pleasure, guys. And
awesome.
Let me know if you guys have any questions in the meantime. I'm always here to chat.
Yeah, I will probably have many questions regarding WFA, but that's probably later, yeah?
Yeah, I promise the strategies are almost ready to go, my friend. And we have the screeners already on Stockrover, kind of working with the proof of concept. So just please, any suggestions you have for screeners, let me know. I'd be more than happy
Yeah.
to help out.
I will be working.
I'll get a VPS for us as well. One VPS so we can kind of share and just learn more with it.
Yeah,
Is this the way the mutual funds managers work? Like this, using all these kind of things?
Yeah, so like I shared the Google Drive with Colin, but in school when I was like taking finance, I had to learn like portfolio capital risk management and different ways to manage the risk of a portfolio. And the number one way of managing the risk is finding I guess, the correlation between the assets and the sectors of assets that you have within your portfolio. So if you're only investing, let's say, if you're a fund manager and you have an ETF or a mutual fund, they're both the same, ETF or mutual funds. Just mutual funds have a higher MER because they rebalance more frequently. But if you have let's say, a balance of only cannabis stocks, and you're promoting your ETF or your mutual fund as a safe fund, that's technically uncompliant because you're only stuck to one market or one sector. So there's specific compliance matters you have to abide to. I would say, okay, in order to be like a balanced fund, which is like the Canadian legal terms for like properly managed, you'd have to invest in stocks in asset classes or sectors that are inversely correlated. And to do that, you have to go ahead and make sure that you find the relationship between the basket of assets that you're investing in within the fund. So what Colin said about those 3 pairs the other week or last week was very solid, because he was able to determine the correlation with the actual pairs and see, okay, if one pair was to pick up, the other would pick up as well. And it was really good. But as a fund manager, you don't want to invest in only those 3 stocks in your fund, because when you do that, it's you're pretty much exposing yourself to a maximum amount of risk. If you guys see my screen very quickly, there's something you guys use the correlation on FinViz, right? I'll show you on my screen. If you have FinViz Pro, I'll show you right now actually. So one really cool thing with FinViz is I don't use it for anything other than the WDB screener. And with this one, if you go into a stock like this, CREX, right? You can go ahead now and find out all the correlated assets that it's correlated with. So in this case, if I was to go, let's say, maybe that one doesn't have anything correlated, but MSFT. This is something that maybe is some food for thought or something to consider. You can see all the stocks that are correlated with Microsoft. So now going into here, and let's say going into charts, you can see that Microsoft is also correlated with, the QQQ, TQQQ, which is pretty much triple leverage of that, and all of these ones. Right? ProShares ETF. And if you want to know what the QQQ ETF is, really straightforward. Just the NASDAQ, I believe. Yeah, the NASDAQ 100. So, I mean, if you want to find out if this price of, let's say,
really,
yeah, right? So this pretty much does the correlation matrix for you, and tells you which assets are correlated with a value of 1 or like 0.9.
God, we need to build that for crypto. I don't think there is one yet. I've been Googling it while you're talking a bit, and there's just no real screeners for crypto. And I think obviously it's small, so what's the point? But also it's so heavily correlated with itself, right? Like altcoins just tend to all bleed together. There's exceptions.
You said it very well. There is nothing like this for crypto. There is, I think, one thing on Coinity. I think they had it back in the day. I don't think they have it anymore. I wish FinViz had GBTC. I really want to see how GBTC is correlated, but I mean they don't have it, unfortunately. If you were to say, I don't know, what's like Tesla, for example, right? If you were to see the correlation of Tesla, and you're like, okay, cool, you can see here that it's really correlated to nothing. So this is a much better idea of what to expect. But if you were to do something like, let's say, Apple, right? Apple obviously makes up for almost 10 to 20% of many type of sector ETFs, as is, and you can see here on the correlation matrix, it's positively correlated with all of these. Now, as a fund manager, I guess I'll also share you guys the docs that I have for all the courses in finance that explain this type of stuff. But if you guys are interested in finding inversely correlated assets, now as a fund manager, you'd want to, if you have, let's just say 10% of your portfolio in Apple stock, you would find the inversely correlated assets and hedge yourself this way. Kind of like how you would hedge yourself in a long or a short, right? Same kind of deal. So this one is, just to confirm, so this is positively correlated, this is inversely correlated. And this would be your perfect hedge. Obviously you have the SQQQ here, you have the ProShares short. So all of these are short ETFs of the NASDAQ 100. And that makes sense because if you look at the NASDAQ 100, components, Apple and I believe Microsoft account for 10% of it. Here. So what this example is a very generic example, but weights 11% and 10%. So it makes sense if Apple was, if the QQQ was to shoot up, that Apple would also shoot up with it. And if the inverse SQQQ ETF was to shoot up, it's probably because Apple is shooting down. So this is obviously a very blatant example, but now adding this to like penny stocks and seeing which penny stocks within different sectors are inversely correlated, like that would be even more key. And that's pretty much the purpose of the correlation matrix. And that doesn't require any type of rocket science or any type of amazing indicator or criteria. Rather, it just requires more intraday candle data. Instead of end of day, if you can even have 5 minute or 1 minute, that would give us perfect hedging strategies for portfolio capital management. And with crypto, like what Colin was saying, imagine now being able to find out all the correlated assets with, let's say, WAN or ICX, just by plotting the 5 minute intraday candlestick data for the past 1 month of like 200 crypto pairs. That'd be ideal. You can just have the perfect portfolio, and that's it.
Yeah, I mean, you look at stocks and you can imagine like funds all over the place are already onto this. And so you see like those correlated assets are moving very quickly. I'm sure the delay between like one moving up is much lower, right? It would be like instantly there's all these bots that are following it with the, but as like you saw in crypto the other day, I mean, we had 4.5 hours, after ICX's pump, because it's not really algos that are following it. It's these traders, right? They miss ICX and then they look at WAN, they look at Aon, they go, oh, well, we know these, and then VTC and GRS are similar like that in crypto. So super pumped to get some of this kind of stuff, right at our fingertips. Solium.io was like a sentiment tracker. It's not loading right now for some reason. If you go to top right, crypto social listening, this thing was giving 48-hour tips on what was going to pump during the bull run. And it only really worked during the bull run. But if the buzz on the social media spiked by maybe 4,000%, and some of them would, then, we kind of jokingly, my buddies and I were just looking at it. We're like, man, that one's going to go. And then if sure enough, 2 days later, my buddy's like, man, it pumped. We didn't get it. And so like by the 5th example, we were like, okay, fine, let's start buying some of these. And it was just like clockwork because it's so speculative, right? So it's really, crypto's all about who's talking about it. None of it actually has any real value in a way.
I agree. I used to use with Andrew, we used Solium for a bit because I had a bunch of the Twitter feeds. I had Facebook. I don't know if I had Facebook. I had Twitter, I had Reddit, and it also had a bunch of feeds for like the contributions on GitHub. Whenever there was activity on the ICO's GitHub repo, it would like say, the past 24 hours, it's experienced 400% increase on contributions than it has in the past month, right? Stuff like that would be amazing sentiment on top. And something like Cryptolium, we've been using it before. They have obviously like negative, positive across Twitter, GitHub developer activity, all this kind of stuff. This would be super, super ideal because if we were to have the correlation matrix, you know how you said the coins moved after 4 hours? Well, if you're having only end of day data, we can't determine that 4 hour move. You know what I mean? We would just say, okay, they moved within the same day. But to have it done, let's say, off the 1 hour candles and realize, okay, ICX always moves 3 or 4 hours after one, for example, then because we have the end of hour candle data, we can actually find that correlation and better hedge ourselves. But yeah, that's pretty much, I guess, everything in a nutshell. Thank you for posting that, Colin. I just read the chat right now. I will post everything on the Google Drive for the screeners and for the watch list that I make for the correlation stuff. And in the meantime, if you have any suggestions for more fundamental criteria to add for the current screeners, just let me know. But yeah, everything will be ready on Excel in the next few days.
Perfect.
Cool.
And it will be for crypto too. No problem. It's my pleasure. And reach out anytime if you have any questions.
Sounds good. Okay, thanks, Reza.
My pleasure.
Bye, guys.
Absolutely.
Thank you.
My pleasure. See ya.
Guys.
Bye. You're a nice guy. Oh, nice guy. Okay, thanks for waiting.